Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Danny Akuye.
And I'm Juliet Sali on this Tuesday, where we have seen a little bit of momentum coming through ahead of course, the key inflation data this week, Danny. And of course, we had those retail sales numbers coming through too.
Absolutely. So let's check in and see how the market has actually performed. It is a little bit sad to see the momentum has drifted off, but we have stayed in positive territory with the COB 200 up almost 4 points or 0.3%. And the ASX currently, I have it up by about 28 points, and that's back over the 7,000 level, or 0.4%. So it did survive the retail sales, and also Michelle Bullock up in Hong Kong, reiterating what is fairly hawkish rhetoric. But let's have a look in terms of our three themes of today. And I said a retail sales slump. Probably a slump is a bit of a big word, but I wanted to get some alliteration in there.
I think as well, when you're starting to get these monthly figures, I mean, it was down 0.2% in October. A lot of economists saying, look, people are holding back for the Black Friday sales in November, which anecdotally, it does look like the foot traffic has been quite good. CBA said that they had seen quite a lot of people and did some vox pops. People, you know, saving up and buying Christmas presents in these sales. And then we've got Cyber Monday, of course, as well.
Absolutely. Just interesting also, CommSec talking about, or Commonwealth Bank talking about the iron ore prices, the boom effectively, and how much that's going to bring into the coffers for the government, because nobody has been forecasting $130 a tonne. Not that it's necessarily going to stay there, but I just thought it was worth bearing in mind, because a couple of years back, our mining majors, BHP and Rio Tinto, moved into some of the top dividend payers in the world because of high iron ore prices. So I guess, I'm not saying they're going back there, but there might be scope in terms of a slightly better dividend payouts.
And, you know, you then got China jawboning a little bit in terms of that momentum in the metal as well. But I spoke to Peter Pan from ACY Securities on the trade. He still thinks, you know, the likes of Fortescue, BHP, Rio have some more momentum when you're looking at the technicals.
Wow, more upside. We like to hear that. And the AUD rocks, again, probably a little bit of a stretch, but nevertheless, the little Aussie battler has really put in a good performance from its lows at around 63 cents against the US dollar. In October, we're currently over 66 cents. So if you're going to be doing some of that YOLO traveling, it might get a little bit cheaper.
Just as I'm about to transfer some money from overseas, I can never time the FX market. But anyway, it's good for people going overseas, as you say. Let's have a look at some of the sectors. The banks, we did see some momentum in the big four, up by about 0.5 to 1%. Macquarie Group there up by about 0.2%. And of course, there was a lot of focus on energy too, Danny.
Absolutely. So weaker oil price overnight. We've got that big OPEC plus meeting coming up on Thursday, obviously trying to negotiate what's going on with the Nigeria and the other one in Africa in terms of wanting to produce more oil. So energy stocks under pressure today, with Ampol and Woodside off by over 1% each.
And then just looking at the retailers, because we mentioned that retail sales figure, but as I mentioned, a lot of anecdotal evidence suggesting that there has been a pickup in sales over the last few days for Black Friday and Cyber Monday. So most of the retailers looking a little good today, a little stronger, I should say. Nick Scali there, of course, had big moves last week, up by 0.8%, $10.84.
Yes. Now, let's have a look at some of the big stories today, because Link Administration has apparently had its biggest jump in 11 months, currently closing up 3.75% on an annual outlook upgrade. I'm sure there will be some relieved shareholders.
Yeah, and Collins Food, I think it was up by about 10.5% at one point. It saw its net profit almost quadruple to $50 million. Revenue also coming to raise its interim payout as well to 12.5 cents per share. And looking ahead, they expect consumer pressures, though, to remain high over the coming year.
And Ramsay Health Care also in focus at their AGM, and they're seeing further growth in earnings in the full year. But most of that is going to come through in the weighted towards the second half of the year, and that reflects a positive contribution from non-recurring items in the first half of full year 23.
And Origin Energy flagged a loaded LNG vessel docked at its local Pacific facility on the Curtis Island has lost power and was unable to leave the terminal. So Origin, of course, which is in the middle of this billion-dollar buyout battle, did see a bit of weakness today, closing down 0.5%, $8.46.
And a C-suite change at Tabcorp, the company appointing Mark Howell as CFO, and we can see those shares were a little bit firmer today. Now let's check in with the stock of the day, which was PointsBet, and our guests Mark Morland of Team Invest and Francesco D'Estradas from Ord Minnett.
They had their AGM today. The update was quite positive. They're meeting their targets. So based on that, look, our guys got a buy on it, but I'd be more speculative and say it's a speculative buy rather than just a buy. Right. I think there's still a great deal of risk in these businesses. I mean, if you're looking at what they do, is they just do Australia and Canada now. Your competition in Australia is, Blue Bet makers, Tabcorp as well, and there's probably a few others there floating in. You've probably got an SP bookie still sitting on the end of the bar somewhere in certain pubs in country New South Wales. So I think competition's quite high still. So it is risky. But that's gambling, isn't it? You're at the risky end of the, and they work out the odds. So I think it's a speculative buy.
I agree with Francesco. You have to assume the US has been a disaster, but you couldn't consider it as anything else other than speculative.
Yeah.
Because they're yet, now they've changed the business model. US was the big hope, that's gone. Now it's Canada and Australia, and we're still not making money, but we're going to try and break even next year. It's like yawn.
Oh yeah. Okay.
Well, welcome back to the COB. Martin Crabb from Shaw & Partners, who's been flying all around the country doing some very important business. But in terms of what we're seeing, we talked about those retail sales, but what does the RBA do next week? Do they hold and wait to see how November pans out, or do we see a December move?
Yeah, I think Michelle Bullock would love to hike just to put her foot down and stop Canberra tinkering with her board, etc., and telling her what to do. But, the market's pricing in zero probability of a change to rates next week. There isn't a meeting in January, so the entire country, including the Reserve Bank, takes the month of January off, it would seem. It's great, isn't it? So we've got to wait till February. So there's the futures curve at the moment. So a couple of things to note is, one, it's drifted higher at the short end in the past week. So green's a week ago, black's a month ago. So we've drifted higher in the short end. So we're pricing in almost a full rate hike up to 4.6 by the middle of the year. So the market's sort of saying maybe March, but if not March, then June. But just how flat it is, right? So we've got no cuts at all. We're still sitting above, above 4% out until the middle of next year, which is as far as the futures go. So this higher for longer, tighter for longer narrative is well and truly in the market now. There's not a lot of real dissent about there's one more hike to go. So we need much softer data. So as you said earlier, retail sales are a little bit softer, but not so much that they're going to change the narrative. They had a pretty horrible wage price index. They know that wages are going higher. House prices just continue to go up. We had another good weekend of auctions, so house prices, and there's some crazy behaviour. It's back to sort of bull market crazy behaviour. Properties going $1 million, $2 million over reserve sort of stuff. So real sort of FOMO in the housing market. That's inflationary, right? That's going to keep putting rents up, keep putting house prices up. The cost of buying a new house is still going up, and wages are going up. So Michelle Bullock's got her work cut out for her, no doubt about it.
Do you think by delaying it till February, they risk sort of, I suppose, letting people get more comfortable with inflation and the pressures build up and the expectations build up? I mean, it's a fine line between the long and variable lags coming through and reality for people to change their behaviours. Because we don't like change much.
No, and look, inflationary expectations are this kind of theoretical construct that it's not really a financial market instrument or something that you can see and feel. It's the collective belief of millions of people. So it's hard for economists and monetary policy people to get their head around inflationary expectations. But we do know that a portion of the population is suffering already, and you can see that if you drill into any sort of retail sales or consumer sentiment or credit card data or any of that sort of data that's around. the people that are on the edge are really, really hurting, and we'll see that with I think Metcash's results are out next week, and they're they own the IGA brand. They also own the home timber and hardware business, so they're a little bit discretionary and they're a little bit staple. So you get a good read into that.
10.
Yeah, Mitre 10.
I love Mitre 10.
Yeah, I do too. Look, everyone loves Bunnings, but
No, but I love Mitre 10. It's
Mitre
much
10's
easier
pretty
to
good.
navigate.
it's
No
not-
sausage sizzle though.
It's not as cavernous as Bunnings.
No,
Bunnings
it's
is
not.
kind of scary,
It's
isn't it?
light and it's airy.
Yeah. So it's look at that. I think the hardware business is going okay. The supermarket business is probably struggling. Interestingly, cigarette or tobacco sales are down high single digits, and that makes up 20% of their food sales, which I find staggering.
Everyone's vaping.
That people are just going, I'm quitting the darts. I can't afford. I'm going to Rollies or
But
whatever.
are you surprised? Have you seen how expensive they are? It's $50 a packet.
Yeah, so I live with a smoker. I know exactly
Oh,
how much
dear.
it costs, and it's insane. I remember vowing to give up smoking when they hit $5 a packet, and they're over 10 times that now. It's just an insane number. So look at it. It's just another sign of people that are struggling, are cutting back on. It's supposed to be a discretionary item, but anyone who's ever smoked knows it's addictive, right? So, but it's another sign of the two-speed economy. So, look, the big risk now, I think, is not that inflation's out of the bottle in Australia, is that they over tighten, and they'll be really wary of that. It's very easy to over tighten. It's a super sensitive break, interest rates in Australia, because we know everyone's got fixed rate mortgages, floating rate mortgages. It used to be all fixed, and now they're all floating. So, unlike the US, we're very touchy break. So I think if the big risk the financial markets will start to focus on going to next year will be how big the earnings hole is going to be. So we've done the damage already on the PE and higher rates, but the question is, earnings are held up really well. The question is, earnings, are they going to hold up? Now, you talked about iron ore. That's the one area of the market where we come upgrade. No one has $130 iron ore and 65 cent or 66 cent currency. So that's almost, do the maths, $200 Aussie. No one's got $200 Aussie, including the federal government. So the federal government the tax revenue out of this is great. So that's stimulatory, having an iron ore price where it is.
So that's why you're looking at Rio?
Yeah, like Rio's also topical because they have an annual investor day, which is next week. I think it's on the 6th. And it'll start, they're a London company, but it starts at 4 p.m. our time. So every man and his dog that follows Rio will be on that call.
I remember, I think the one last year, was it earlier on this year? I even watched some of it. That's a bit tragic, isn't
Yeah,
it?
look. If you're into mining, it's a cornucopia. It's like the Sydney Easter Show. There's just so many things to listen to. Like you got iron ore, you got copper, you got Oyu Tolgoi, you've got Simandou, you've got all that sort of stuff. But also they're a big customer and a big supplier to China as well. So we'll get their insights as to where they see things going. Most people don't expect surprises from these things, but if we're going to get a surprise, it's probably Simandou gets the green light and that comes to market quicker. And the other one everyone's looking at is CapEx and costs. So these guys are going to spend probably $9 to $10 billion US dollars a year, which is like 3 times what Qantas have to spend on planes. It's a big number. And obviously they're at the pointy end when it comes to costs. So, probably the miners have got the worst cost inflation of anyone because it's just difficult to get people in those remote locations, difficult to get fuel in. They're spending a lot of money on decarbonising and electrifying their systems, etc. And it's really difficult to get people to work in those sites. So a lot of the results that we've seen from miners have disappointed on the cost front. Here's another miner coming to market, and we might get an update on that. But I think they're all come upgrades because everyone's just got too low iron ore prices. So we added Rio to our portfolio probably 4 weeks ago, just in anticipation of, look, we've got iron ore wrong, it's way too bearish, and everyone's upgrading, so you want to get on board.
What about Fortescue, and what about the impact from China, as I mentioned, trying to, I guess, a little bit jawbone?
Yeah, well, they're trying to talk iron ore down, but it's it's difficult to try and talk a market down, and it's like there's a lot of, we don't know how much speculation money there is in iron ore. Some of it's steel mills buying because they need to buy, but anecdotally there's a lot of speculative positions in iron ore. There's a lot of money that follows trends, and if you look at how things trend, iron ore's kind of just been in one direction. So people are on board that trend, and it's one of those things that if it turns, the thing can gap down. So I'm a little bit nervous about it where it is, but it's like it's had a lot of bad news thrown at it, and it's still going up. So it feels like China is re-stimulating, so that's just going to hold it up. But they are trying to talk it down. The steel mills there aren't making any money, so they're trying to talk it down from that perspective. But it does seem to be defying gravity, staying around. It seems to like this $130 level, doesn't it? Yeah.
Which, as you know, they're just for these big miners. It's just you can hear the cash register just going cha-ching, cha-ching, cha-ching.
Oh yeah, well, so $200 Aussie, they're digging it out of the ground, $15-20, and we're selling 1 billion tonnes. So you do the maths; it's a massive amount of money.
So I wasn't too far wrong about those potential dividend upgrades.
Yeah, probably coming your way.
Probably coming your way. Well, it might be a safe port, let's say. But Martin, thank you so much for joining us.
Thank you, Danny.
Okay, Martin Crabb there from Shaw and Partners. Always a great chat. Now, let's check in with some of the leaders and the stocks that didn't lead. So Collins Food on the back of, I think it's that dividend hike they had. That really got the investors all sparked up over 8%. Helios continuing to rally after, I think they had that issue last week, up 5%. Emerald Resources up a 3.8, and Regis also up by almost 5.
That was on the gold move, wasn't it? A lot of the gold players looking
a
pretty
bit
good today.
Firmer. The gold price was up a little bit, and Cromwell Properties up by 3.75%.
All right, having a look at the laggards today. Core Lithium, you and I were talking about lithium earlier, down 6%. Weebit Nano in the tech space off 3.5%. Bapcor was down by almost 3%. Johns Lyng down 2.5%, and Virgin Money UK, which got hit quite hard, I think, on Friday, down another 1.4%. Let's have a look at the small end of town as well, starting with the leaders.
Oh, Newfield Resources going to the races, literally up 30%. Ioneer up about 13%, and Brainchip back on the boards, up by 11.4%.
And the laggards in the small caps Select Harvest down 11%. We've got OneView Healthcare, Encounter Resources, Cobalt Blue, and Iris Metals off by 9.3%.
I was interested. They didn't have Imugene because I know they are getting FDA approval, and that stock was up quite strongly earlier on in the day. And also Plenty, another small cap, which was also very strong because NAB is potentially going to take a stake in them. They're a fintech, and they're also going to be providing loans for, I think, electric vehicles and solar panels.
Host small caps today? You're sounding very knowledgeable in that space.
I saw Plenty. Do you know why I mentioned Plenty? Because I actually know somebody that works there. So I go, cha-ching, I know that. I know that name. Otherwise it would have been
very knowledgeable.
I know, for
Call
small
you Nadine
caps.
in a moment. All right, let's have a look at what's happening overnight. US home prices, consumer confidence data, the Richmond Fed Manufacturing Index, and some earnings, including CrowdStrike, Hewlett-Packard, Intuit, and Workday.
Yeah, and Zscaler actually reported after the close. Great results, but the stock was down a little bit, having already doubled over the last few months. Now, the day coming up tomorrow, what have we got? We've got that October CPI read, which apparently is going to be a little bit softer. Construction work done for Q3, RBNZ policy meeting, and looking towards tomorrow afternoon. Apart from the, is it Rio? No, Rio's next week, did you say? Is US GDP for the Q3, and yet again another host of AGMs, including EML, Linus,
Harvey Norman, Link.
Yeah, quite a few.
Well, it was interesting because Link was a big mover today, wasn't it?
Yeah,
as well?
I might feel that might have dropped in the wrong day.
Yeah.
Now, shall we have, Jules, a final check of where the markets ended?
I think up by about a third of 1%, 0.4% on the ASX 200, 7,015, up by 27.6 points or 0.4 of 1%, crossing above its 50-day moving average. We talked about Collins Food and Helios lifting the market. The index, though, down about 0.9% over the last 5 days.
Yeah, and just having a quick look at the Aussie dollar trading at 66.21 cents. Now, have you wondered about the secret to success in stock picking?
I have.
I got through that. So many S's. We were having a giggle, weren't we? But anyway, we shouldn't do that. Join stock doctors Daniel Ortizi and Tim Lincoln as they lift the lid on the rigorous filters and processes they use to pick stocks and power returns. And it's this Thursday at 11 a.m, live or on demand.
And some of these secrets have led the Stock Doctor Star Stocks funds to yield 17.3% per annum return since inception. Don't miss this opportunity to ask them questions. To learn how they do it, it's free to register. Head to ausbiz.co/Stock Doctor. That's one of those ones when you write it, you have to read it out because that was like a lot of S's.
Peter Pepper picked a lot of people.
We got through it. A lot of S's. Okay.
Well, that's it for today. And we've had a great day and lots of great interviews that you can check out, including in the small caps where I dipped my hand into. But of course, tomorrow will be a big day with that inflation reading and lots more. So we will see you tomorrow at 9:30.
Indeed. See you then.